joining us to make sense of the stocks, the earnings season, the markets right now. How is everything shaping up on the fundamentals? And Mr. Baliga, hi, morning. First up, give us a general sense of where you're seeing the markets headed, given we're into the sixth or now the seventh consecutive phase of consolidation, depending on how our market opens today. What is the general sentiment that you're seeing in the market right now? Anywhere you believe that the correction has been good enough that merits a relook in terms of how attractive a particular sector is looking?
Sentiment clearly is weak right now. I mean, if you see, I think this is after a very long time. If I'm not wrong, I think it's after close to a decade that we are seeing that the markets have slipped for 6 weeks in a row. I mean, not 1 week in the last 6 weeks we have seen an uptick. So from that point of view, I would say the sentiment is weak. Technically, I think if the markets slip below 24,250, possibly we could see a decent downside, because that's where possibly some amount of panic can settle. I mean, although there is decent amount of liquidity, no doubt. But then again, psychologically, I think people will get a bit tired, would panic, possibly post the fall below 24,250. So I think that's one level to be really watched out for. And because of these tariffs, I think what is coming out is that the GDP will not fall more than 0.35 to 0.6%. I mean, I think that's at a very, very broad level. But then if you dig a bit deeper down, there are a couple of sectors which will actually get affected quite a lot. I mean, those would be textiles, clearly gems and jewelry to a certain extent, seafood, some of the engineering companies which are dependent on US exports and don't have any sort of manufacturing facility in US. I think they are the ones which will get affected. So these are those sectors where possibly, and the certain companies in those sectors. I mean, you really can't generalize, because again, if you talk of auto ancillaries, there are quite a few large auto ancillaries which have operations in Europe, which have operations in Mexico, US. They may not be, affected as much, but the ones which don't have will surely get affected. And this could have a long-term effect because you really can't, shift operations overnight. You can't get new customers overnight. So although, you could have some of the government schemes announced, which could be sentimentally positive, but then it will not reflect on the balance sheet, because all these things can't happen overnight. So I think those are the specific sectors and stocks which one needs to keep a watch on and be careful. But otherwise, I suppose, if we hold on to these levels, then we could see a decent sort of a bounce back after this sort of a fall. But then in case we break that, then I think the next level would be about 23,500 or so.
Sure. Ambareesh, hi, morning. What's the takeaway from SBI as well as Tata Motors? For Tata Motors, of course, it's the PV figures which have been quite disappointing. But what about SBI? Neutral, you think?
Yeah, SBI, I would say, is neutral. I don't think it'll really, like over the next 2 to 3 quarters, I think we should still see some more of a upside. But then at the same time, I think when we're talking of banks overall, I think one needs to see as to what is the sort of exposure these banks have on the textile sector, because like I said, that could be one sector which could get affected. And one of the banks which have a decent exposure on textiles is Canara Bank, SBI to a certain extent, but I don't think it will get affected that much. When you talk of Tata Motors, I would say it is disappointing, but the stock has already corrected decently well, so I don't see too much of a downside from here.
All right, that's about SBI and Tata Motors. But Mr. Baliga, what about the cap goods space? Because of late, the companies have been reporting a good set of earnings. Rather, we have the moves in stocks like Cummins, Siemens. What's your overall take on the sector and any of your preferred bets right now?
In cap goods space, yes, I've been positive, but I think one stock which you forgot to mention is BHEL, where I think the earnings were not really up to the mark. So BHEL, I think we can see some more downside, maybe another 30-40 rupees from here. I think at those levels, it becomes a buy. But something like a Siemens, I think even at the current levels, one should look at buying. ABB is the other one, where I think we should see a decent upside, possibly about 20-25% upside from here over the next close to about 9 months or so.
Voltas, that's the one from within the cap goods space which is going to be in focus today. They've reported a miss on the top line as well as on the margins, and clearly, challenges still remain. Brokerages are obviously downgrading the stock now to a sell, and the margin weakness was pretty much broad-based. It was across segment. I can't really pinpoint as to one sector or segment within the company which was actually weighing heavy on the earnings. There was the UCP decline, which was higher than estimate. The bigger disappointment, of course, has come in on the margins at 3.6%. And this was because of the higher discounting, channel incentives amid a weak season and negative operating leverage as well. Sharon, what's the chart reading on Voltas? It seems like it's headed in for a down day today, reacting to its earnings.
Absolutely, Aisha, looking very weak on the charts. Till 2 weeks back, I was quite positive. It was showing higher high, higher low, but the trend has completely changed. Now it's trading below all its moving average. It has a small support around the 1300 mark, I think, which is about to get broken today. The next support directly comes between the 1200 and 1225 odd rupees. So if it comes around about that level, I think it can consolidate for a while, but I think on the charts, definitely looking very weak. And even its similar industry like a PGL and Amber all have reduced their commentary for the coming 3 to 6 quarters. So overall, I think the industry can witness some kind of downside.
All right, so that's about Voltas. Let's watch out for that. One of the other counters that we have been talking about is actually Manappuram Finance. How are the earnings looking like, and what is the management commentary as well? Let's go across to Varun to find out all those details. Varun.
Well, so if you look at the results of Manappuram Finance on expected line, they are weak because the overall net profitability of the company that has gone down by around 11%, the NII that is down by around 7.4%. But if you look at the gold AUM, that has increased by 22.4% on a YY basis and also 12.3% on a quarter-on-quarter basis. Also, if you look at the MFI book, the overall book is down by around 23.1% on a YY basis and by around on a quarter-on-quarter basis and 50.7% on a YY basis. And on a standalone basis also, if you look, the gross NPA of the company has actually gone up from 2.8% to 3%. But the management commentary is actually a little bit good because if you look, the company has said that they want to gradually improve the overall gold loan mix to around 75%, and the MFI book will be around 10% of the consolidated AUM. The company has guided that the gold loan growth for FY26 will be better than FY25. Although the gold loan yields that have come down from 22.2% to around 20.7% in this quarter, this would decline to around 18% over the next 4 to 6 quarters. But the peak in the MFI business, the peak stress in the MFI business, that is over by Q4 of FY25, and the losses will keep declining in the subsequent quarter. In fact, they say that the overall credit cost should decline by around 30 to 40% in the coming quarter for MFI business. And also, going ahead, the company has guided that it could deliver a profit in the MFI business by Q4 of FY26. So this is a very good commentary by the management. Also, the management is hoping to bring down the overall operational expense by the end of this year. And the company is also in discussion with banks for opportunities in co-lending. And after the results, there are several brokerage houses who have upgraded the stock. For example, ICICI Securities has upgraded from hold to buy. They have raised the price target from 260 to 305. Motilal Oswal, they have a neutral call, although they have reduced the price target from 290 to 280. But Jefferies also has a hold call, and even they have raised the price target from 240 to 275. So on expected lines, the results are weak, but the commentary is little bit good, especially on the MFI side, and also brokerage houses have upgraded the stock.
Okay, Varun, thanks for taking us through all of those details. In a short while ago, we just spoke about how these NBFC counters, they stack up on the charts against each other. But Mr. Baliga, what is your view on the fundamentals when it comes to some of these NBFCs? And if you just zoom out a little bit, NBFCs versus PSUs versus private banks, if you had to play this entire financial pack, where would you be placing your bets?
See, even within NBFCs, I think you have to divide that into two parts. One is which are mostly gold loans. I think they would continue doing decently well, although the interest margins could come down, like what Manappuram management has talked about. But then overall, I mean, as far as the quality of the book is concerned, will not really get affected too much. But then when you talk of the other, NBFCs, I think there'll be a decent amount of pain on the retail side of the loans. So that's one thing which I think people need to be careful about, because we could see more NPAs coming there. And when we are talking of the private sector banks versus PSUs, I think PSUs should do decently well, because I clearly see credit growth, picking up decently well as far as the corporates are concerned, because of the tariffs. I think there will be a government push to increase capex as far as the private sector is concerned. And that's where I think the PSU banks will benefit. So over the next 2 or 3 quarters, I think we should see a decent amount of credit growth happening.
Interesting. Okay. That's the take coming in on which way the banking and the financial services segment is going to actually head. Awaiting by, of course, the pre-open rates, and let's see which way the move actually heads. It's been 6 weeks of a consecutive decline.